44 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, I'm going to cover some new Fibonacci targets to the upside on the S&P that was just issued, and we're going to discuss whether what the probabilities are they'll be hit. Let's get into tonight's video. Hey folks, welcome to the Kendall Report. Yeah, it was an interesting day trading today. We saw quite a bit of swings going back and forth, and last night when I was doing the Substack newsletter, we actually printed up was what would be the high of the session for the S&P and for the NASDAQ as far as that would go. And what we saw was pretty much a sell-off, and then we went negative on the session, we rallied back to positive, and we closed right in the positive. So we got our 3 days up that I've been talking about, especially in the Substack, and I've been mentioning here on the channel. So we did get that formation, so we're likely to get a couple days down. I mentioned in my opening comments that we do have some new Fibonacci targets to talk about, and I'll save that for when we get into the critical level and we go through the markets. And this will be probably a condensed version of the stream. I try to keep these to 30 minutes, and just as a reminder, there's no video tomorrow. There will be Substacks tonight and tomorrow night, and I'm going to continue with the Friday lives that I've been doing during the markets. I think that's been really effective to show you how to position yourself in these markets during on an intraday basis. So let's talk a little bit about, we did get some numbers that come out in Wednesday. Of course, we got the Meta report that came out, and it was kind of in line, but they just crushed the stock down 10%. The opposite of what happened with Tesla. And Tesla, I think, ended up closing up 12%, but they didn't have the hypester of all time, the world's richest man, to pump up and tell you he's coming to save you. And we're going to make new cars, and we're going to sell more. Anyway, Zuckerberg's not as effective with his rah-rah speeches and what they're doing, and so you don't get the pump that you get when Elon's hanging around. And listen, I'm not an Elon hater. I actually really respect the guy. He does amazing stuff, but he has done nothing but overpromise and underdeliver on Tesla forever, and that's why the stock's down, substantial. I think down 50% from its highs or something like that. It's a lot. It was down 40% on the year, so now it's only down like 38% or 30%. So anyway, enough on that. But we did see Meta come out. That crushed the market. Right after I was sitting here right after the market closed today, and all of a sudden it just got hammered. I thought, wait a minute, what's going on? And then I forgot about the Meta report that was coming out. So, and we're going to have more of this. I believe we got Microsoft and Google after the close on Thursday. There's a lot of stuff. I told you we're going to get some volatility, and I was interesting when I saw the results of after the reopen tonight on the futures to see that we've got some new fib targets, which I think will be interesting to watch, to say the least. But it's interesting because I really still see this rotation. I'll touch on the database. Maybe I will bring the database. We'll touch on that and go through it. But let's talk about tomorrow's numbers. We do have the GDP coming out. This is, I believe, the second, maybe the first revision of GDP. It's expected to be 2.4. Last month reported at 3.4 plus. The deflator, which is a number that I watch pretty closely, is expected to be 2.9%. So that's basically the inflation indicator there. And then we also get pending home sales, and that's expected to be up 1%. I keep arguing that the home real estate market is not, the retail real estate market is not that terrible. We did see, having said that though, I think we did see mortgage apps today come out minus 2.7. It was up 3 so last week, so just a continued movement there. We did see durable goods also come out on Wednesday's action, up 2.6, so that was better than expected. So none of these metrics I don't think are tradable to speak of, and I'm not even sure why we watch or talk about them, but I think it's the noise, it's the entertainment that comes around the markets. And certainly around earnings time we get a lot of these a lot of this volatility, and this ends up to be a pretty big week. We'll see how next week sets up, but the earnings ongoing here, I still expect to be really neutral on the end, but I do expect it will keep a little bit of a bid around the markets, even though we're seeing a decent sell-off as I speak right now. We'll go through all the details. Just glancing over some of my notes, the 10-year Treasury's upticked a little bit. Still think we're just looking at stable on the interest rates, and there's not a lot of movement. So I should be able to get through the whole stream here. I'm shooting for around 30 minutes or so, and so we'll get through that. Yeah, so that's interesting, Todd. Yeah, I've got one house on the market here. I have 2 houses that I'm selling right now, and so it's interesting. We'll see what kind of activity we get. Officially just coming out just now, so that I think that's the case, and I do recall from the live room days where you're at, so that's, I'm sure, is still a very hot area. All right, so let's get into tonight's stream. Just to set this up, I'll touch on the WaveTech database just to update you and talk about what I am expecting there. We'll get into the S&P, and we'll start talking about these new Fibonacci targets. I was surprised to see them pop out, but we had some pretty decent rebound movement off here, so it's setting up a potential 1, 2, 3 pattern, which I'll also discuss. All right, let's get into the WaveTech database. So I've been telling you we're not going to see a big movement here, and let me pop over to this other page here, and you'll see this is not today, so we'll probably see a little more traction. The key number that we look for here is actually 22%. If we get back above that level, will show us that we're stabilizing and that the market wants to consolidate and maybe set up a larger pattern. So right now we're at 14.02%. This is yesterday's run. Today's run doesn't happen for, actually won't be out for a couple hours yet. But from the standpoint of what's happening here, this is what I've been setting you up for, is we should see, it's going to take, I still believe it will take multiple weeks to set this pattern up, and on a short-term basis, and I don't think we just get this big tranche of orders coming back in, but hey, anything's possible. I'm reading the data, so I'm not actually going through, I'm not trying to predict, I am, but I'm used to watching how this thing normally unfolds here. So we're 14%, we get to 22, and then we got a 22 to 28, and it all goes through the same cycle every time. And once we get, like I said, above 22, then I'll have a little more confidence. Right now, we're really just grinding, and we should see, like I said, overnight we're going to go to that next. We're looking at some negative numbers coming in, mainly because of the Meta earnings. So we'll have to see what kind of sentiment, if that changes anything or not. So right now, 14% long is nothing. We did get down to around 11, low 11s. So we're up 3%, and we're a long ways from, like I said, being anything that looks like bullish. All right, well, here's the big reveal. It was interesting when the market reopened, and we're down right now. This is a daily chart we're looking at. We're down 31 handles, down 0.61 on the day, and we're looking at the. It's interesting. I mentioned these red dots. Let me bring this up so you can see right here, and let's draw in a couple things because this is important to understand here. Is what we're looking at is the potential, right? This red line right here is right at the 53.20 level, and then we've got the 3 green dots here. These are new Fibonacci targets. They are 52.37, 53.41, which, by the way, would be a new high in the pattern, and 54.06. That's up here. So those numbers are suggesting that we're going to get a move back up. Here's what I've been talking about both on Substack and on the channel here, and this goes for the NASDAQ as well. As we get these 3 bars up, we've got one little bit of a downtick. We probably get a couple days down. I suspect we've already got, if you can see here, I'm drawing it in, we got the top end of the market grid to turn down. We probably get this, and so we end up with a pattern that sets up, and we get this 1, 2, 3 pattern. And my guess is we don't see these new highs, but we potentially see this move up to this last arrow I just put up, and right there, that is likely to be, this is likely to be the final upside of this, and it's a perfect 1, 2, 3, which is that it would be an ABC pattern retracement. It would take us up to where 1 and 3 are actually suggesting that they will be equal in length. That would be this first target here. So that is 52.37. That's a little higher than what I've been talking about from the standpoint of the pattern here. So that looks to me fairly realistic. Let's look at the PPMs. They're telling us the same story here, and the configuration here. And I'm pretty sure I've looked at the NASDAQ. We're going to have the same thing. So I'll touch on the NASDAQ, but I'll spend most of the time setting up the pattern. Just know that it's going to be very similar on the NASDAQ when I get there. So if we look here, let's just draw this in. So you can see PPM1 here is starting to look like it's going to move up. That's into maybe the first week of May. So this sets up perfect, but I was just telling you, getting this 1, 2, 3 up. Like I said, I don't think we take out these highs over here. That's not what I'm expecting here. So we should get, this is going up, but look at the PPM2. It's not getting any kind of acceleration, nor is the longer term averages. So this is what this tells us from this standpoint. Like I said, I'll spend most of my time sitting here right now, but if we come back to this, what it's telling us, you can see the downward slope of this 21. That's still going to be some resistance on the upside. You can see the market grid has turned down a little bit. Move that around. So we get into this area here, possibly over 4 or 5 days. Then we get to the point where maybe we can get up and challenge this 52.20, 52.37 level would be it. The important number, I mentioned this in Substack, important number that you want to watch for is around the 50.50, 50.38 number as a support. That should hang in there fairly good. If we look at the market grid just for today, S2 50.73, and 50.55. We're currently 50.76, so we're already trading into those levels. All right, let's go to the NASDAQ. All right, NASDAQ has a little bit deeper pattern. It does not have that red pivot number that we have up there, and we did get some fib targets in here, and I don't know if you can, there's little green dots in this range here coming up to the 21. So we're looking at 17,580 and 17,758 and 17,869, right within the grid numbers here on the daily. So you can see over on the far right, the grid is similar numbers, 17,830, 17,917, 17,975. So that little cluster of numbers up there is probably where we end up. And it does also show from a configuration that we may only get one day down. This is the same thing with the S&P, so we could get a one day down, and I would definitely be looking at these configuration as somewhere for it to bounce off the lower levels. Maybe we even hit an STX level, which is 17,333. So look at the STX numbers if you have the indicators, kendallreport.com/indicators. Best way to support the channel, and also best way to accumulate profits. But this is a problem here from a big move, is we have one of the what I call the V bottoms on PPM1, but the other indicators are not participating. So whatever we get from this is likely to be a little bit muted from the standpoint of how high we go. And this 40 period moving average up here right now is at, let me just get you a number, 18,150. That's most likely between the 18,014 and 18,150 is going to be the top end of this range. So just like with the S&P, we get this little 1, 2, 3, but I think it's more of a correction, and it's part of this this mess. And I'll show you. I will feed this same pattern exists on the S&P, by the way, as well. So let me just bring that up and just do that real quick. And if you look, if we drew a line through here, this is all resistance up here. There's just a lot of work went on, and very choppy patterns that set up here. So what these are telling us is that there's just going to be tons and tons of resistance up here, and that's why we just probably get one of these little muted 1, 2, 3 comes into this pattern. The 40 just is coming down, and we end up getting in this range, trading within these bounds here is where we're likely to end up. So I don't see the big explosive rally going off to new highs, and the only thing that would convince me that that was the case is that we would be seeing the database on a short-term basis get some serious traction. And like I said, I'd be surprised on this whole scenario that we're building here that we get up above 28%. And the big number for setting up what would be a new high run would have to get at least up to 42%. That's a key trigger number in the database. So it's just going to stay choppy. I think it was on Twitter or maybe on YouTube here. Somebody said, you said the market wasn't going to pump. This isn't pumping. This is a recovery rally after a very steep decline. And now we're setting up this pattern, which is part of the consolidation that I've been talking about for a while. And like I said, this mess up here, this is just through this level up here, it comes right in at that 40, just those around those lows. We went a little above and below this line, but this is really just a part of the larger pattern here. And let me take a quick look, because I want to let's go to a weekly chart just for a second here. And this, the pattern that I was discussing, and let me get this adjusted out for you. This, when you start to look at it, you break it out and look at the weekly chart here, just looking at the graph, I mentioned on the S&P, and I mentioned also on the NASDAQ that I think the bar would get an inside week. It's possible. What that means is we trade within that big bar that we traded last week. And then typically what will happen, it will make a new high, reverse down, and then punch out the low again. This pattern suggests to me we're not anywhere near an absolute low in the markets. And what we should see is ultimately, I'll draw this in very quickly here, is what we see then is this pattern here where we get this little bump, and then we ultimately come over here. And then I think there's probably more work. I think as we go through, there'll probably be some potential to make some money on on individual stocks, trading them, but we're not going to see the indexes make big moves. The relative basis where we're going to see a new high. Just don't see those patterns setting up at the moment. So we'll go from there. So to finish, we're 21 minutes in. I'm going to touch on interest rates and probably go to Bitcoin. I'll come back up and talk to you for a few minutes, and then we'll call it quits for today. I think, like I said, all of these indexes are set up the same way. Russell, not that it's not totally unimportant, but these are the big trends, and this is where the earnings that we have coming out after the close tomorrow. And then I'll try to do my best to set up some of those expectations in the Substack tonight. So remember to get the newsletter. It is kendallreport.com/newsletter. You can sign up. There's a 7-day trial. It's $8 a month. So that's where you're going to get more micro analysis. I try to get it done before the London Open. I probably will have it done because I'm out of town tomorrow, so I have to get up early to get out of town. So anyway, let's go ahead and let's go to the Treasuries real quick. Yeah, and I think FF's right, kind of a dead cat bounce, but I think there's more to it. There's more structure needed it's just not going to do this and go down. It could, listen, anything's possible, but most likely the structure we're seeing. And when I write the Substack tonight, folks, I'll be able to tell you a little bit more, see if we get more traction. If this little rally that we got again today was able to get traction, even though, like I said, we're down overnight, I think the traction, depending on what type of I guess numbers of buys that we get on the database, I doubt we're going to get an 8% bump, because that would be a huge number. It'd be thousands of symbols coming back in. If that did happen, then that would reveal something bigger, but I don't see it happening. I think a lot of I kind of go through and click through the database randomly, and what I'm seeing is a lot of patterns are absolutely crushed, and so they're not likely to rebound from there. So let's talk interest rates here for a minute. We're continuing, this is a weekly chart. We're continuing a pretty decent upward slope here. When I bring up the indicators, we are looking at into mid-May that the uptrend here for yields will continue, but the support levels are a bit below. I still think 450, 4.5%, maybe 442 is a good number, but we're going to stabilize here, and they keep printing this up. There's still, and I can't ignore these numbers, but if we look at the chart, we can see there's still two Fibonacci targets on the upside. 478 and 490 are still possible. And so from that standpoint, it looks like we're probably going to, there's still an upward bias, but we do see this thing peaking out somewhere toward we'll say the end of May coming into June, and this sets up, this might be more visible here than it is in other places, but this sets up probably the bottom for the equity markets during that time. I've been preaching that we probably have, we've got less than a week left in this month, but as far as we come into May, we're probably going to see, for the most part, a downward May, and everybody will be screaming, sell in May and going away, and we might be screaming, buy at the end of May, maybe June, and put it away, and because I think we could, still looks like we have a potential for a summer rally. I didn't mention it when I was talking about the database, but the weekly database is still in the 70% or 61% bullish. So it's actually in a place where it's going to still have enough traction to keep more of a consolidation phase going in what I've been talking about. There's possibly going down one more leg, but it's too early to call that. If I see the pattern set up, if this at the end of what I'm talking about right now, as we come into probably the end of the month, the first couple of days of May, we should see a reversal and then some downward numbers from there, and then that will set up ultimately the end of May and the possibility of maybe getting a decent buy range at that point. All right, so this is kind of getting to be a little bit of a broken record because we've got Bitcoin up here now. What we're looking at is this broad pattern that's set up, still waiting for this volatility compression that I've been teaching you folks about from the market grid standpoint. There's still very expanded volatility. We got some decent volatility last week because we printed down to the 59,600 level and then rebounded back up. And this was the halving event, and it was a dud, as I said it would be. And it looks to me that, and I went through a lot of details here, but I'll draw it in again. And I've been talking this, like I said, it's kind of a broken record type situation. But this upward trend right here is going to end right as we come into May, and we should see the markets ultimately get into this wedge here from the standpoint of where we should trade, and that's going to put us down roughly around 54,000, something like that. And my expectation for this is that we probably get some kind of range bound in here. From that standpoint, we should actually see the market grid start to tighten in. And I don't think it comes in here, but it might. If we start to look at what the projection of from the standpoint of what the algos are telling us are going to happen out here, you can see we're getting crisscrossing. So this would suggest that it's possible for us to get, all the way back into a range like this as far as the potential support in this market, just around the 21-week moving average. And it's being projected to be pretty weak. This forecast will change once we get probably another 2 or 3 weeks. This is pretty compacted from that standpoint. I don't expect a full-out collapse where we'd come back into the previous highs here. That's probably not likely, but I do expect to see definitely this pattern that I've been drawing in. We should see market grid dominate in this as far as the range goes. And you can see it's interesting if you're willing to be open-minded and you're not talking your book, which is always hard for all of us to do, is if you look at these areas that we had these consolidations before, that this is just a larger one, and we've been getting these consolidations and rising to the next level, and that this is the first time, because if I ran this back, you would see that the algos were suggesting that we were going to rally up here. I'm just trying to get the right tool. Sorry about that. But it was suggesting that we were going to get, this move up. Now they're suggesting we're going to get a move down. So worst case is very large multi-month consolidation. I think you have to actually get all the people that were expecting a rally after the halving event to get discouraged to the point where they start to talk a little different story, and then maybe at that point you may be able to go up. But the whole thing is going to be based on getting the squeeze down on volatility, and I said we're probably weeks away from that. Okay, folks, coming back up here, this will do it for tonight. I'll try to cover as much as this detail. I think I'm pretty sure the Substack will be out a little earlier than normal. I know I've got an early exit in the morning to get out of town and be able to get back in time to write Substack tomorrow night. So I'll try to do my best to describe some of these things, but I think this is going to be exactly what is going to happen here from the standpoint of ranges that I set up on indices and all this stuff. It's very, the final comment, sometimes markets get highly predictable, and then there's times when they get very unpredictable and they're random. And usually that happens when we, when we were just looking at Bitcoin, where you get this broad expansion of volatility, and we have a little bit of that in the indexes, and that's why we're seeing all this jerking around. But even within that pattern, they seem to be predictable. And there's a term that is used around quants all the time, is it's somewhat predictable. And I think the numbers, the percentages, the probabilities are pretty in line right now to make it fairly easy to what to expect going forward. So anyway, hopefully you enjoyed this content tonight. Make sure you hit the like button. You guys know the rules, and we'll go from there. Yeah, James can tell me Bitcoin demand is huge. Well, it's not showing up yet. So it's really it looks to me to be a distribution, at least at this time. But listen, thank you so much for watching, and I appreciate it. We'll see you on Friday live, and that'll be 2 p.m. Eastern time. The Substack will be out, kendallreport.com/newsletter, and get the indicators as well, kendallreport.com/indicators, and that will get you started and really be part of the community I'm building here. Thanks a lot, everyone.